between paying $60,000 in interest and losing $20,000 in inventory, I'm sure most of you realize that it's not as easy as what the gurus make it out to be. These are the untold realities behind the supercars and fancy vacations you see on the internet. There's more money than ever being sold online, and you want a piece of the pie. I know, I've been there. These are the 3 biggest mistakes I've made, and I'm making this video before you make the same mistakes I do. My name is Andy, and I scaled my Amazon business from 0 to $1 million in 5 months and $3.8 million in 2 years. After a long war, losing has almost become a normal, and I created this video to help you avoid all of this. This first mistake I made while trying to scale cost me over $58,000 in the first year. Let me guess, you started your Amazon business and things are going great. You're making money, sales are up, and you start thinking, I can just grow way faster if I had more cash. Oh my God, I've been there. Here's the problem. Banks don't want to lend to you because your cash flow is cooked. I mean, let's be honest here. That's why you need funding, right? The whole reason for the loan is because I don't have money. Like, if I had money sitting in my account, why would I pay you interest to loan your money? It makes no sense, right? That's exactly what I thought. In Amazon lending, they offered me $35,000 when I was doing $300,000 a month at a 20% APR. It was literally laughable. The third option is MCAs, or merchant cash advances. We have the ones in the e-commerce space like 8Fig, OnRamp, Wayflyer, AccrueMe, etc. And we have the ones outside like OnDeck, Lendio, and yes, I've been through it all. That's why I sacrificed myself for the sake of this video for you guys. And yes, they're willing to give you 6 to 7 figures for short term, but believe me, it comes with a very, very, very big catch. Here's the way it's structured. Either daily or bi-weekly payments, meaning like you pay every day. Some are paid like every weekday. Some are paid weekly, but usually it's weekly, bi-weekly, depending on your lender, and always under a year. Flat fee, like I'm talking 80K loan and 88K payback, meaning there's an interest of $8,000. Or they call it fee. Here's the thing, right? If you really calculate the interest of it, it ranges from 50% to over 100% APR. I'm just talking like, how is this not a crime? Should you do it? Man, after constantly investing money back into inventory, seeing a 6-figure wire land in your account, it felt like I finally made it. I'm running a real business now. And let me tell you, that feeling lasted maybe around 2 weeks. And guess what? The same cash flow issues. I mean, in my perspective, I borrowed the money to spend and it was quite literally burning a hole in my pocket, right? Every day it was sitting in my account. I felt like I'm paying interest for just letting it sit there. And I just wanted to put it to work. But the truth is, towards the end of the loan, towards the closeout period, which is basically like the last month, was when it got real freaking rough. Between paying employees, rent, restocking, and whatever other expenses I had, daily payouts of $5,000, meaning $150,000 paid out to me every month. It was cutting close. It was crazy. But on paper and on Sellerboard, record sales, record profits. None of it made sense. So do you want to guess what I did? I'm sure you can guess. I took out another loan to pay back the first one. The math doesn't make sense, but we'll let the math keep mapping. Paying crazy interest just to keep everything running. From the outside, my business looked like it was booming. I mean, we had trailers coming in, we had trucks going in and out every single day. Let me give you the real numbers. This is from OnRamp. 1 round, 3 months, $80,000 borrowed, payments every 2 weeks, $11,200 in interest, and you might think it's 56% APR. That's wrong, because technically you're paying back every 2 weeks, so the true APR is actually around 198%. I mean, it is literally criminal. And if you're thinking, oh, if I invested $8,000, I can make $10,000 a month. And let's be honest here. If that's true, you don't need a loan and you would probably have like a big pile of money somewhere that you could be rolling around in, right? I'm starting to realize why that banks rejected us. Here's the honest results. Once you get into one of these loans, it's almost impossible to get out. That first loan turned into 5 more. $393,000 and $317 borrowed. Total $58,636 paid in interest. All the loans, all under 6 months. The recommended path I would go if I was to do it all over again is just to try to, get Amex credit cards like Amex Gold with no preset spending limit, not affiliated, or like Amex Plum for 60-day payback. Or if you want to go with like untraditional business cards like Parker, Brex, and Ramp, these are business fintech companies and have cashback. As long as you have consistent cash flow coming in, it is the safest and cheapest option, to be quite honest with you. So was the loan worth it? I paid $60,000 in interest, basically, $50,000, but I was finally able to get it out without losing, but 100 times no. But hey, so at least you got this free video, so the least you can do is leave a like and subscribe. My second biggest mistake was accounting. Especially when you're taking high interest loans or even doing 5 to 6 figures in monthly revenue. Having accounting or bookkeeping is one of the most important parts for a business. Let's be honest here. Running a business with thin margins blind is not the way to go, especially on Amazon. And with accounting, I'm not talking about seller board. I'm not talking about, analytics. Oh, I made this amount this day. What I mean is QuickBooks and actual bookkeeping. Every transaction needs to be recorded. The truth is, Amazon disbursements, maybe have 20 different line items from Amazon. That includes like Amazon returns, Amazon fees, cost of goods sold, and so on and so forth. But it's a lot, that's all I know. And you can't just write it off as revenue or income. Having your books correct also gives you an idea of your cash conversion cycle, profitability, your true profitability, and growth, helping you determine as the CEO or owner whether it is the shift you want, helping you actually budget as an owner. It also helps you determine whether a product launch was successful or whether you can take on more additional expenses for employees or anything like that. What I actually recommend for this is Link My Books. I'm not affiliated in any way, and it is actually a cheaper alternative to A2X, but it basically takes all your payouts, or they call them settlements, and separate them into its own individual line item depending on the transactions in the payout, like returns and shipping fees, etc., etc. So when you made it to this level, you need a bookkeeper. Either hire one, do it yourself, or go with a company like CapForge that specializes in e-commerce accounting and bookkeeping. Not affiliated, by the way. The harsh truth is, are you really running a business when you don't do accounting? You're going to realize the insane amount of additional expenses you're paying for and didn't even know. Me personally, I was spending almost $30,000 per month in expenses, not cost of goods, literally in like software, employees, and it's definitely something you need to look out for. Highly recommended to get on this as soon as humanly possible. It will also help with like if you want to get future loans or when it's tax filing time. Fun, I know, right? Third biggest mistake that has cost me over $30,000 personally is lost shipment reimbursements. To be honest, I had no idea this even existed until almost a year into selling on Amazon. Amazon loses 1 to 3% of your inventory because Lay didn't receive it correctly. It's wild. And if you don't file for that recovery, that money disappears after 60 days. Think about what that actually means. You're probably running around 10% net margins, and this is not coming off of your revenue. It's coming straight out of your profit because it's total loss. Let me put this in numbers. If you're doing $1 million in revenue per year, that's $10,000 to $30,000 just gone every single year. Poof, magic, donated to Amazon. If that's what you're in the business for, go straight for it. Some people actually use VAs for this process, but one of our customers actually had a full-time VA, and we discovered over $60,000 in shipments that the VA missed. It was crazy. That's exactly why I built Auren. Most reimbursement services still make you upload invoices and match them to every item for every single shipment. Auren syncs to your email once, extracts everything automatically, and handles the entire recovery process start to finish. No manual uploads, no chasing Amazon, fully automated. I dropped the link in the description below for you guys to get the first $250 but covered for free. Or if you just want to check it out to see if you have any missing shipments, no credit card required. Scaling on Amazon is not what people make it seem. The margins are real, the mistakes are expensive, and nobody talks about this stuff because it doesn't sell courses. I've lost over $30,000 in shipments I didn't know about. I paid almost $60,000 in loans and loan interest I didn't need to pay for, but just for the sake of this video, I ran my business for months without real accounting because, come on, it's taxes, am I right? I'm just kidding. It is super important, and there's a very big reason why every successful company does bookkeeping, and it's not even negotiable. Every one of these mistakes was avoidable, and I'm going to keep making these videos for you guys. This is the stuff I wish someone taught me from the start. If you learned something from this video, please hit the like and subscribe, and if you want to send to your friend, that would be even better. And yeah, drop a follow, like and subscribe so I can save another seller. I'll see you in the next one.